Hey, welcome back everyone. It is time for another red hot covered call video. Today we're going to talk about how I'm averaging $7,100 a month for 2019. This is absolutely blowing my mind. And if you've been with my channel, you have seen how I have progressed over the years using this strategy. And I'll tell you what, I am not doing that much heavy lifting. And if you subscribe to my channel, you're going to see on a weekly basis how I give you timely and relevant trades. And look, I'm going to show you my trades. A lot of times, you could read it in a book, you could watch a covered call Wikipedia version video on YouTube, but look, until you see it in action and hear the stories that I tell, you don't really get that close, right? You don't get comfortable. I understand. I was just like you 3 years ago where I was apprehensive. I did not know the selling premium strategy and I didn't want to mess up, right? I didn't want to lose any money until my mentor Jerry walked me through all of the steps. Right? We talked about the trades. Then he walked me through my very first trade. And I'll tell you what, that's when I learned it. When I got that experience, and I'll tell you, I was out there buying all the secret sauce gurus, special services, and all this stuff. But look, until I did it, I got that experience, I owned it. See, that is the value that I try to give you every week. Showing you my trades, we talk about them so you learn something. That is absolutely the core of this channel. Because I know a lot of you out there are like me. It really is that simple, really that genuine. I offer you up free tools to help you manage all the numbers, right? We have to keep the numbers in front of us. I offer them up to you for free. I offer them up at ctpdashboard.com. That is my website for my free dashboard. I put together a free research dashboard and I offer it up to you for free. I upload it every Wednesday with the best trading stocks now. Look, there's no hooks. There's no advertising in there. It's free. And when you open it, you're going to see 100 of the best trading stocks. And what we're going to do is we're going to start our research. See, a part of this channel is about not getting some stock recommendation from an email and we just go out and buy it willy-nilly and hope for the best. What we talk about here is getting our financial education. And what does that mean? We do our own due diligence. And when we do that due diligence, we own it, right? We really get to know the stocks we're looking to buy. You have to do your due diligence. That's why I want you to come back. I want you to subscribe because I try to put out good, exciting information. Why do I say exciting? Because I know I've been trading the stock market since before the dot-com boom and bust, and it's about being motivated and inspired because it is easy. It is easy to not look at the stock market one day, 1 week, 1 month, and then we miss all those great opportunities to have success. Look, I've been there. That's why I try to bring you the energy to jack you up because for me, it's my passion. It's easy for me to do this. But I know for some of you, you need that little nudge to get off the couch and do it. Now, real quick, I need you to click that subscribe button because I want you to come back. We do this every week. It's timely. It's relevant. I show you my trades. We talk about them and maybe you learn something. And look, if you like this video today, I want you to bang that like button. It lets me know you like what I'm doing. And what we're doing is this. We're riding a stock market rally that continues to go higher and higher. It absolutely blows my mind that all the gloom and doomers in mid-December, man, they were just throwing the baby out with the bathwater. And I'll tell you, look, I am not going to pat myself on the back, but if you've been here on my channel, you know what I told you. I told you this is what Wall Street does. I've told you from the jump that this is what it's come down for me. I have accepted that. And when you accept that, you work it, right? I understand for a lot of you, it's hard to deal with these massive dips in the market, but that's how they do it now. The numbers are so big. You see these huge numbers on TV, the Dow being down 800 points. I get it. It is easy to turn your head. But look, this is what they do. They run it up to sell it off to run it up. The reality is, man, they are not making money anywhere else as fast, as quick, as profitable than the stock market. So money comes and it goes and it comes right back. You just have to believe it. And that's what I did when the crash, and I'll call it a crash because hell, look at this. The Dow was trading that high and in a month it tanked. And I'll tell you what, the gloom and doomers were out. They were posting up articles saying sell, sell, sell. And I'm sitting there saying, look, we just need to get past the new year because, they were selling into the new year, right? And then once the selling got so deep, man, they started to sell because they had massive losses. So for me, I just waited. I waited for that opportunity when we got that bounce bounce. And sure enough, look at this. Right around the beginning of the new year, right? All the numbers reboot for these brokerages, and they started to buy them for no rhyme or reason. And in fact, they rallied it almost damn near back to the high. It is about having a mindset and an understanding that these things happen today. And what we need to do is learn strategies to benefit from. Now, before I get to my two trades here, I used an Adobe cash secured put when Adobe had traded down 20 points in one day. I showed you the video on that. I was able to write an at the money cash secured put on that heavy selling day. I picked up $14 a share, and sure enough, timed it perfect. Adobe rallies higher. That's when Adobe hit 200. Adobe's now trading over 260. Look, at the end of the day, it's about having a mindset of success, right? We're always going to be the cup half full guy. That's what I am. It's always about the next opportunity, not the current disaster, but the next opportunity. Now look, right now we're riding this decent wave, and you could see the stock market is now looking at a little bit of recent resistance. Now the question is, does it get past there? We have a lot of news happening, right? We have the president overseas trying to strike nuclear deals with a country that doesn't want to strike a nuclear deal. The China news is coming back somewhat positive, and quite frankly, the top is going to pop when that news comes out positive. But look, until we get it, we have uncertainty. When we have uncertainty, what happens with Wall Street? They sell it off. I mean, Wall Street has proven this time and time again when the Fed has uncertainty about interest rates. This is probably one of the most important times where we have to gauge if there's more uncertainty or we start to get certainty. We start to get positive news out of China, positive news here or there. So the important thing is to stay focused, stay engaged, and look for that next opportunity. I'm riding that opportunity right now. I actually think, the Dow will trade sideways here, some down days, some up days, and we're going to trade through it. Now, part of my early success this year is using leveraged ETFs. Now, I know for some of you, you have just screamed, no! Look, I've done my homework on leveraged ETFs. And for me, if we're going to use a leveraged ETF, I want to use a leveraged ETF using an index. Why? Because an index is diversified. Like the Dow, right? The Dow is made up of 30 stocks, 30 great stocks. So the index gives us that diversification. I'm not out there buying the leveraged ETF BIB, which is the pharmaceutical 2x leveraged ETF. Look, if anything happens with the pharmaceutical industry, BIB is going to absolutely tank. Now, I want to maximize my diversification, but still get a little bit of premium when I write these covered calls. So I use these leveraged ETFs. I trade UDIA in these 30-day windows, and I'll tell you, I have had tremendous success. I used about $33,000 in February, and I generated over $2,500 picking up premiums as the Dow rallied. Man, they were taking my shares away from me. Oh, I was loving it. And I'll tell you what, UDIA is now one of my favorite plays. Now, for me, it meets my risk profile. It is a 3x leveraged ETF, meaning if the Dow's up 1%, UDIA's up 3%. If the Dow's down 1%, it's down 3%. So you don't have to, if you don't have the stomach to deal with an ETF like UDIA dropping 3, 4, 5 points in a day, if you start to learn the process, you can really benefit from using leveraged ETFs. Now, I know there's a lot of gurus out there that they absolutely will not use leveraged ETFs, but you know what? Chuck Hughes, the guy I watch all the time, he uses them, and he uses them in a very conservative way, and he is successful. Look, you can look at this two ways: highly risky, leveraged ETFs, or you could say, look, I am very skilled, I have my education, right? I've done this multiple times, I understand the risk, and then using these leveraged ETFs, you can actually make some real money. With that said, I've actually done a couple videos on this. And look, after this video, I want you to go watch that video because that's where I laid the groundwork for why I'm using these leveraged ETFs this year. Now, let me show you some UDIA profits. Now, for me, these 4 trades here at the top have expired, and they took my shares. So what I was doing with UDIA was this. As you can see, I was buying UDIA as the Dow was heading higher. I'm going to show you the chart here in a minute. But as UDIA was heading higher, right, I was just writing these 30-day covered calls. Now, as we got into the month of February, as we were getting close to that February 15th expiration date, obviously I wasn't getting the same premiums as I was when I was writing them 30 days out. That's that time decay factor, right? There's not as much time, so I wasn't getting as big a premium. But I kept buying 100 shares here, 100 shares there, and writing those covered calls. And I'll tell you what, you could see right here, this number here, this 3,600 includes this new trade for March, where I bought 200 shares and I wrote the covered call. So that number's not right. But if you add these totals up for February, that was over $2,500 on $33,000 invested, which was over 7.2%. I was knocking down some serious cash printing machine money using these 3x leveraged ETF. Let me show you the chart on UDIA. I believed Dow was going to go higher, right? We had just hit 22,000x, and man, they had sold off. They had thrown the baby out with the bathwater. Well, I figured if the Dow was going to rally back to anywhere near 26,000, man, UDIA would be a great opportunity because it's 3x leveraged, right? So if the Dow moves up 1,000 points, right, UDIA would move the same 3 times. Now, with that said, I had confidence that the Dow was going to rally back to at least 26,000, and I was going to benefit from that. So I started buying my shares at 75x, and then we got into the 80s, and I kept buying and kept immediately writing that February 15th short-term covered call. And as we got into that February expiration, UDIA was over all of my strike prices. All of my shares were taken away, pocketed the money, and look, we rebooted for March. And what did we do in March? Even when UDIA was getting close to 100, man, I'm feeling so confident with UDIA. I bought shares at 96, wrote that 100 covered call, got a couple bucks for it, and look where we're at now. It's almost at $100. Look, we still have about 15 days of trading. I don't worry about this. It is the 3X Dow tracking ETF. So for me, where the Dow goes, UDIA goes. So right now I'm feeling like the Dow's going to trade sideways to up. So for me, I keep buying UDIA. I keep writing those out of the money strikes, and we're going to keep playing it. Now here's the strategy going forward. If we were to get UDIA falling back down to the mid 80s, I'm going to buy these options back, and I'm going to then look to write the next out of the money $5 strike, right? So what I'm looking to do here is when I buy UDIA at 96, I write the out of the money strike, the 100 strike, and then I pick up a couple bucks for it. Well, if UDIA were to turn from 96 and head into the upper 80s, that $2 premium I got paid, right? That $2 premium I got paid is actually going to fall with the stock. So as we get close to expiration, which is March 15th, this $2 premium is going to fall less than a dime, right? Because the likelihood of UDIA getting to 100 is highly unlikely. I'll buy it back at no cost. Fidelity doesn't charge me if an option gets below 10 cents. And then I have the shares, and then I'm going to write the next $5 out of the money strike, picking up the same $2 premium. We're going to do it again and again. Look, this is my mindset. This is why I trade more than most. And this is why I think you come back every week to watch my videos. It's about the excitement. Hey, look, whether you agree with this trade or not, hey, does not matter. What matters is that you watch it, you get excited, maybe you learn a little bit, you'll go out and do it. Now look, let me show you this cash secure put because this video is getting long. Now, you know I love playing Win, and Win recently had some great earnings. I mean, of course, Win is rallying coming out of the entire stock market rally in December, but Win hasn't rallied as much as we'd like, right? I mean, it fell from 200 to 91. So when the Dow starts to rally, you're thinking, hey, it might get at least halfway up, similar to Adobe. Adobe fell to 200, it's back to 260. So you're thinking, okay, Win should do the same. No, Win has a lot of challenges, and so it's not moving with the rest of the market, but it has recently made a decent run. Well, when earnings came out and Win really gets going, I noticed that as the markets were trading a little sideways, people were taking profits in Win. And when Win came down and tested 125, I thought, look, this is a great opportunity for one of my cherry picking cash secured puts. Look, what I'm looking to do is to write that 30-day cash secured put where I put the money up to buy somebody's shares at 125. I give them a time frame, 30 days, and I want paid. Well, when it was trading down some $3 on this day, I went ahead and wrote in at the money 125 cash secure put. Now remember, I don't expect to get assigned the shares. If I played this right, Win was going to turn around and head higher, and my premium, for which I got paid $5.60, was going to deteriorate. It was going to fall as Win rallied higher. Now, that was all pie in the sky at the time that I did the trade. But sure enough, Win did turn around and head higher. And as it headed to 130, this got down to 120. Now I'm thinking WIN's going to go even higher because we're getting a lot of good news out of Macau, but it did not. So WIN starts to tail off, come back down, and when it was trading at about 126, yes, 126, I was able to buy this back for $1.90. Now, the reason I was able to buy it back so low is because we're getting close to that expiration. And the likelihood of WIN getting to 125, well, that's here or there, but I bought it back. So what does that mean? I got paid $560 and I paid $190 to alleviate my obligation, meaning my cash comes back into my account. I don't have the obligation to buy somebody's shares at 125, and now I can look to do the next red hot cash secure put trade. Now look, I know a lot of you are saying, John, it's March, where's that newsletter? I want that special 3-video series on the absolute basics of covered call writing. Not just buy 100 shares and then write a covered call basics. I mean, get me into the stock market. Talk to me about how I sign up with a brokerage like Fidelity and walk me through it. Well, that's coming. Man, that's coming. I almost think I can do it today. But look, I need you to go to my website, ctpdashboard.com, and it's right there. You got to sign up for the free newsletter so you get the email. And I think you're going to like it. Now, if you like what you heard today, I want you to subscribe to the channel because as this year unfolds, I use every single tool in my toolkit. Man, I use cash secure puts, covered calls, married puts. We use the poor man's covered call. I have a mindset that keeps me active, motivated, and excited to do this every day. To be honest, I'm probably the most exciting person you've heard when talking about covered calls. Because for me, making that tiny crumb, it isn't about the money, it's about the success. Because how many of you have failed trying to do the stock market? I know, I've been there. I have this success time and time again, largely because I had a mentor that helped me, that coached me, and then I did it. And once I did it, I owned it. That's why I always preach that, because I'm telling you, this is not rocket science. You can do this. Now look, if you like this video today, I want you to bang that like button. It truly does let me know you like what I'm doing. And look, it motivates me to do the next red hot covered call video. Until next time, I hope all your covered calls are profitable.